All right, so for next week, what is the expected move for Apple? Okay. Anyone else? It's about $7. Okay. So if we have roughly a $7 expected move, okay, the market is looking for a range, basically, let's call it 186 to 200. Okay, so let's get this up on the board here. Expected move to next week ahead of the event is $7. Expected range is 186 to 200. Okay. Now, I'm not advocating bullish, bearish, anything like that. I'm just looking, trying to price appropriately what the market is pricing. Okay, so if we look at those expected moves, 183 to 200, first thing I want to look at is you know, an iron condor, and we're going to see that this is just god awful. And I'm sorry, not 183, 186 to 200. Which you're still going to see is incredibly brutal. Okay, look at this iron condor, guys, and I'll write it up here. So the 187.5, 185, and 197.5, 200 iron condor is only trading for like $1.05. Whoop, not 0.105. Sorry. $1.05. Okay. Break even on that. 186.45 up to 198.55. Okay. That's awful. That's awful. Now, it's not enough for me to say, boy, I want to buy that. But I certainly certainly would not be selling it. Gus, I absolutely would. I absolutely would, but that's going to make it even cheaper. That's going to make it even cheaper. Remember, the expected move is 200. If we look at the 200, 202 and a half, that will put it outside of the range. Okay, let's do that. But then look at the odds that I really have to lay. Whoops, let me... Okay, so for 85 cents. So the 187 half, 185, and 200, 202 and a half is 85 cents. Now my break evens are now reduced to 186.65. But I now have a little bit more room on the upside. But now look at that reward to risk. So, yeah, you have a definite wider range for this to be, at least on the upside, for this to be successful. But now, I got a lot of risk there. I got a lot of risk there. Does that make sense, Gus? They have their big announcement about their new streaming service and this, that, and the other. It's like one of the Apple days that they have. So, that's I don't love an iron condor there. The only other thing I would possibly look at is strangle swap. If there's enough of an advantage, if there's even any, in volatility between next week's options, which are definitely priced higher, and some subsequent weeks. So I would go down to roughly the expected range areas, so maybe the 185 and then the 200. It's actually very interesting that the skew is to the call side in Apple, the volatility skew. I mean, that's a pretty expensive strangle going out 2 weeks. Let's see, just about a 1 weeker. Yeah, nothing there. Nothing there. I'm definitely not a fan of this. So, I mean, we can keep, well, broken wing fly, we're going to pick a direction then. Gus, do you have a direction that you would want to look at? Okay, so what you're saying then, Gus, is you're bullish on Apple. So you're taking a stance and saying you want to take a look. We can certainly look at that. Okay. Okay, so the broken wing fly you're looking at, just remember, because you're looking at the sweet spot, okay, the short strike being 202.5, which is well beyond the expected range. Okay, the expected range is 200. This spread should be trading cheaper and offering better reward to risk than what we would typically look for had we targeted the expected move strike. Okay, so let me put this up here. Okay, trading $1.50, right? $1.50 for a $7.50 wide iron broken wing fly. 4-to-1 reward to risk, right? 4-to-1 reward to risk. However, if we adjust the strikes, do the same, let's do the same $7.50 wide broken wing fly, but just adjust them down to the expected move range. Now you're talking about something that is really right in line. You know, if that is $2 or $2.10, now you're talking back to the 2.5 to 1 reward to risk. No, no, no. It's fine. No, they're not, Gus. TOS is showing a $7 move, 7.10, something like that. I can pull it up right now. TOS is showing a move of now it just popped up to 7.50, $7.50 expected move to next week. Got it. But no, this is. I'm glad you brought this up. It's a really, really good question and a really good conversation. Okay, so we can look at that. Let's look at that. Let me put it up on the board. Again, this is all supposing you're bullish. And if you're bullish, fantastic reward to risk it. You're right. Fantastic reward to risk on that. So Gus, maybe you found something there. I'm going to look at that. I'm actually talking to Mike Shore about it right now. Oh, absolutely. Love broken wing flies. We do them all the time. It reduces the cost of your overall debit. Now, as we discussed earlier, and I think it was Ken that really brought a really good point. It also can cap your upside, a bit. But remember, risk reward is a balance. If we're taking less risk by um, paying less debit, then we should have potentially a little bit less reward. Oh, I see what you're saying. Sure, you could do it, but then you have more of a debit outlay, and you better get your move. That the size right here, David, is the size that's actually bid or offered in the marketplace at those prices. So for instance, the March 195 call here is 247 bid, but there's only bid for 2 of those. Now it's 75. Offered, there's 219, now 388, now 88, et cetera, et cetera. So if I was playing both sides, Gus, if I was doing both of these, I would never do a broken wing fly on both sides. Too many contracts. There's probably other ways at a much more cost-effective standpoint to play both sides of the market. Now, I got a question, and this is not going to influence whether I put this signal out or not. Who's bullish on Apple? Sorry, I just took a drink, Michael. Sorry about that. So who's bullish on Apple? In it doesn't have to be bullish on Apple for a month, 6 months, 9 months, whatever it is. It's really bullish on Apple just for next week. Okay, so if you're bullish, guys, if you're bullish for a trade for next week, okay, if you're bullish for a trade for next week, this is about as good of reward to risk as you're going to find. And I will tell you, because I was telling you, I've been talking to Mike Shore while we're discussing this. He's actually going to put this out as a signal right now. Well, this thing at a buck is phenomenal reward to risk. Pretty sure that's where he's putting it out right now. And I see the signal right there. Does it look good to me? From a reward to risk standpoint, it looks phenomenal to me, Chris. From a directional standpoint, I think that, you know, it's a bit of a toss-up, honestly, what's going to happen on this news here. And that's why I'm saying if you're bullish in Apple, this is about based on the expected move. This is about as large of a reward to risk, I think, as you're going to see. So from an opportunity standpoint, I think the opportunity is great. It's obviously just a bullish spread. I do think that there's going to be some really good support in Apple at 190.5 or so, which is the 200-day moving average. And if it doesn't hold there, I think it could really be in for a fall. However, if it does, you know, this thing, again, the reward to risk on this, and Gus, I give you the golf clap. Again, let me put this up on the board here. There you go. And I'll tell you what, I am going to put this out, but I'm going to put it out for half of our normal allocation. I'm putting it out because, exactly, Eric. I'm putting it out because the reward to risk is so high. I'm doing it for half our normal allocation because I think there's a little bit more risk to the position, which obviously goes hand in hand why the reward to risk is so much higher. Does that kind of make sense?